Dubai real estate is full of opinions, but opinions don't build wealth, clarity does. If you had bought a villa in Dubai 8 years ago, chances are you would be sitting on well over 100% appreciation today. Most people still assume villas are just a luxury lifestyle purchase. I disagree. In my experience, villas chosen correctly are the most strategic wealth building asset in Dubai's property market. Whether your starting point is 5 million dirhams or you are targeting a 500 million trophy estate. My goal today is to arm you with clarity, how to buy the right villa at the right time in the right way, and avoid the costly mistakes that 9 out of 10 buyers make. By the end of this video, you will know exactly which type of buyer you are, whether a villa truly fits your goals, and how to execute a smart purchase with discipline. Let's begin where the modern story starts. In May 2002, Dubai opened the door to freehold ownership for foreigners in designated areas. It wasn't just a policy change, it was a philosophy, a willingness to let global capital, talent, and ambition root themselves in a city that was still writing its future. The first decade after that decision saw the emergence of master communities and beachfront dream escapes. The next decade brought professionalized developers, deeper capital pools, and a more sophisticated buyer. Then 2020 reset what people value: space, privacy, air, gardens, neighborhood, belonging. Apartments will always have their place, but the aspiration for a front door that opens to your own garden becomes undeniable. The villa segment, which once felt like a niche for the well-to-do, became the heartbeat for families, entrepreneurs, and long-horizon investors. But here's something most overlooked. Villas are not one product. They exist on a ladder. At the base are lifestyle villas, the 4 and 5 bedroom homes where families plant roots. Above them sit prestige villas, larger plots, deeper setback, better sightlines, more architectural presence. Then comes signature residences, homes that are as much about art and identity as they are about bedrooms and bathrooms. And at the top are legacy assets, singular estates with plot sizes, views, and pedigrees so scarce that they redefine the market when they trade. Understanding which rung you are stepping onto is the first filter of a smart purchase. It sets your expectation for price, behavior, rental demand, liquidity, and holding cost before you ever fall in love with a floor plan. Before we get tactical, ask yourself a simple question. Who are you in this market? In my practice, every villa buyer fits one of the 3 profiles. The first is the lifestyle owner. You want permanence. You want to open your door and see your kid playing in your own garden. You want to host families on weekends without fighting for lift space or visitor parking. For you, a villa is not primarily an investment. It's a life decision with financial benefits. The second is the smart capital buyer. You think in yield, cash flow, internal rate of return, and exit timing. You will live in a villa if it suits you, but you will equally happy to rent it for stable multi-year income while compounding your equity. The third is the legacy builder. You are not benchmarking against average yields. You are building a decade-long story. You buy what is hardest to replace: plot size, frontage, water, privacy, and a name that endures. Once you know which of these you are, the path becomes obvious. The wrong purchases happen when a lifestyle owner tries to buy like a flipper, or when a legacy builder expects apartment-style liquidity. The most common debate I have with clients is ready versus off-plan. People want a single correct answer. but theirs isn't one. Red is about certainty. You can touch the finishes, see the street, feel the light at 4 pm, and either move in or rent immediately. Off plan is about vision. You look an early price, you phase your payments over years, you position yourself ahead of handovers when demand surges. Both work beautifully for the right buyer at the right moment. A family that needs stability today will not be happy waiting 2 years for their kid's bedroom. An investor who wants maximum capital growth and flexible cash flow pacing will prefer a handover 2 or 3 years out. The wealthiest portfolios I manage use both levers: ready assets for immediate cash flow and off-plan position for appreciation. So the portfolio is always compounding no matter the cycle. Now let's deal with reality. Every market offers gifts and traps. Villas have carrying cost. Gardens, pools, facades, and larger roof areas need maintenance. Communities with high service charges can erode yield if you don't price rents correctly. Ultra luxury villas can be thinly traded. Getting in is easy when you are excited. Getting out requires patience and positioning. And yes, supply matters. A wave of handovers can temporarily fatten asking prices even in good areas. None of these are reasons to avoid villas. They are reasons to buy with a system. Emotion buys the view. Discipline buys the outcome. That brings us to the heart of this video, the Smart Buy checklist. This is the exact framework I use with my private clients. 13 checkpoints that turn emotion into execution. I will walk you through them in clear English with examples and the why behind each. First purpose, clarity. Are you buying a home, an income producing asset, or a legacy piece? Write it down. If you are a lifestyle owner, location, convenience, school runs, and noise maps matter more than squeezing the last 0.5% of yield. If you are smart capital, your modern must start with rent comparables, realistic vacancy, and maintenance reserves. If you are legacy, you prioritize scarcity signals and privacy over short-term cash flow. When your purpose is crystal clear, every trade-off becomes easier. Second, market timing and cycle awareness. Dubai is healthier than most global hubs because it keeps building, but that also means different submarkets move at different speeds. Look at interest rate trends, major project launches, and delivery pipelines for your chosen communities. A great villa bought 6 months early can feel average. The same villa bought at the right moment can feel like genius. You don't have to time the exact bottom. You need to avoid obvious headwinds and buy on terms that protect you. Third, location liquidity. Not every lovely villa is easy to exit. Liquidity comes from connectivity and daily life frictions. How many minutes to key schools? What's the peak hour exit like? Are there multiple access road or one choke point? Where are the nearest supermarkets, parks, and clinics? The broader the demand pool, the easier the resale and the steadier the rent. If you care about future buyers, buy what most future buyers will care about: time and convenience. Fourth, developer credibility and developer quality. Floor plan and brochures are promises. Reputation are proof. Study a developer's past handover, facade longevity, waterproofing performance, and customer service. Talk to existing owners if possible. For off-plan, dig into escrow structuring and milestone logic. A cheaper launch with vague details is not cheap. It's expensive confusion dressed as value. Fifth, community demand and demographic fit. A gorgeous villa inside a community that doesn't fit your lifestyle will drain you. If you are a young family, you will value child-friendly parks, walkable paths, and a community center more than a spectacular but isolated plot. If you entertain often, look for guest parking, wide plots, and layouts that flow. If you are assembling a rental portfolio, study what tenant profiles actually sign 3 years leases, their families, executive, sports professional, and what they refuse to compromise on. Sixth, capital growth potential. Appreciation isn't magic, it's math plus momentum. Look for catalyst. New road lanes, highly quality schools entering the areas, retail opening, neighboring communities upgrading, and large scale city investment within a 10 to 15 minute drive. If two similar villas exist and one sits near a planned arterial road while the other sits near a bottleneck, the compounding over 5 years will diverge quietly at first, then obviously. Seventh, rental yield and vacancy realism. For investors, paper yields mean nothing without tenant stickiness. Villas often host families that renew if you maintain the property and respond quickly. Price fair. Invest in preventative maintenance and avoid over customization that narrows your audience. Build a maintenance reserve into your numbers from day one, not as a surprise after the first summer. 8th, holding cost, service charges, pool and garden upkeep, AC maintenance, facade cleaning, pest control, list them all. If you are moving from an apartment, the scale of a villa's upkeep can surprise you. It's not a reason to avoid buying, it's a reason to model realistically. Some communities have higher charges but deliver lifestyle value that easily supports higher rents or a stronger resale. Understand that exchange before committing. 9th, liquidity and exit plan. If you plan to hold forever, prepare an exit. Which months see the strongest viewings? How many active comparable listings do you see in your price band? Are you buying a floor plan and elevation that age gracefully? Liquidity is not just how fast can I sell. It's how many credible buyers want what I own. By the shape of demand, not just the shape of the plot. 10th, legal and transfer cost budget, all statutory fees, registration, valuation, and agency commission before you transfer a single dirham. For off-plan, read the payment schedule as if you were your own banker. For ready, check for any outstanding service charges, modification, or NOCs you will need. Surprise skill momentum. Clarity compounds it. 11th, customization and flexibility. One of the joys of villas is personalization, but customization can also hurt liquidity if you go too niche. Outdoor kitchen, pergolas, and smart storage generally help. Removing bedrooms or adding awkward internal levels generally doesn't. If you love a bold interior design, it with reversibility in mind. Think like an owner, but respect like the next owner. 12th, finance structure and cash flow stamina. Rising rates can sting if you are stressed. Falling rates reward patience if you are disciplined. Don't buy at the edge of your comfort just because a bank says you can. Leave room for life and for opportunities. Some of the best investments you will ever make will appear when you least expect them. Having liquidity then is priceless. 13th, long-term vision. 10 years from now, will this villa still fit your life and your story? If your kids will be teenagers, do you still like this school run? If your business scales, do you still love this commute? If you plan to hold for legacy, is this plot size, frontage, and address worthy of your surname? A villa is not only bricks and land, it's a container for the next chapter of your life. Now let's stitch the checklist back into the ready versus off-plan decision, because this is where buyers often confuses wants and needs. Ready suits you if you need stability today, prefer known neighbors, and want either immediate rental income or to move in within weeks. Is the path for people who value certainty and time. Off-plan suits you if you want to stage payments, position for appreciation, and customize early without demolition later. Is the path for people who value leverage and sequencing. If you can do both, stagger them. Secure a ready villa for cash flow and family life. Take a measured off-plan position that completes in 2 or 3 years. When handover arrives, you will decide whether to occupy, rent, or sell into strength. That's strategy, not speculation. We also need to talk about the top of the market because everyone loves to ask, where will Dubai sell its first 1 billion dirham villa? My view, it will happen where 5 ingredients: coverage, iconic frontage, true privacy, world-class architecture, severe scarcity, and a name that transcends the city. That likely means a waterfront or island plot with impossible to replicate geometry. It will not be the biggest house, it will be the most irrepressible one. For most buyers, this matters not because you will buy that asset, but because the logic trickles down. When the apex of a market is set by scarcity and narrative, everything beneath it finds clearer pricing bands. Understanding the apex helps you price the tier you are actually buying. So, where does this leave you today? Start with your buyer identity. Say it out loud. I am a lifestyle owner. I am a smart capital. I am a legacy builder. Next, walk the 13 checkpoints and write your answer. Don't skip any. The checklist is your guardrail when emotion kicks in on a viewing day. Then pick your mode: ready, off plan, or both. If you choose ready, block out a weekend to tour your top 3 communities at peak hour. Feel the traffic, check the noise, and watch how families actually use the parks. If you choose off-plan, review the master plan in detail. Road phasing, school plots, retail anchors, and the realistic timeline between show villa and handover. Ask yourself one ruthless question. If the market paused for 12 months, would I still love this decision? If the answer is yes, you are buying clarity, not a deadline. As we close, remember this: Dubai is not simply where we live. It's home. Villas here are not just big houses. They are instruments for stability, identity, and long-term wealth. The people who win are not the loudest or the luckiest. They are the ones who buy with intention, patience, and a checklist they actually follow. If you want my 13-point Smart Buy checklist in a downloadable format, send me a message and I will share it with you. If you're deciding between 2 communities or 2 payment plan, I am happy to pressure test your number and your assumption. My name is Saurabh Pandey and I have spent years decoding this market so you don't have to gamble with your future. Thank you for watching. If this helped you, subscribe, share it with someone who needs clarity, and I will see you in the next one. Until then, buy smart, live well, and think in decades. Also, go to the description box to contact me via WhatsApp and drop me a direct message. Signing off.